Shipleys FM, Episode 1, Sole Trader or Limited Company.
You're listening to Shipleys FM from the accountancy firm Shipleys LLP. In each episode, you'll hear accounting and tax-saving insights to improve business and personal finances. Now, here's your host, tax specialist Dean Hardy.
Hi, I'm Dean, and here's what we've got coming up for you in this episode of Shipleys FM. We've got a fantastic main topic on sole trader versus incorporation. When is a good time to do that? We've got a fantastic client interview with client David Thompson, film and TV producer. We've got a quick fire sort of mini topic, quick question on HMRC investigations, and we've got a chat Shipleys staff profile with our head of tax, Mike Luckett. Hope you enjoy.
So Dean, one of the, common issues that people want to think about is whether it's best to be a sole trader or to be incorporated to become a limited company. So is that something you hear about a lot from your clients?
Absolutely. It's a question actually probably we get asked as much as anything else if not more so. Obviously most people kind of start their trading lives as a sole trader or with that in mind, and that makes good sense because certainly early days, there's the old adage of more than 50% of businesses fail. And so early days, you're not sure if you're going to make a profit or a loss, hoping you make a profit, but losses are at least usable. In the early days of trade, if you're a sole trader, you can offset your losses back 4 years, assuming before you were a sole trader, you had some income and employment or something like that, you can go back and use those losses. Whereas if you go straight in as a company, those losses are wasted. If you never make a profit, you carry forward your loss and you liquidate one day and they're all gone. So often we see people starting as a sole trader, moving into a limited company. So that kind of always begs the question, at what point does that make sense from a tax point of view? There have been some changes in company tax and dividends, which we can look at. But historically speaking, that level at which you'd incorporate was always about 30 grand. The point at which corporation tax plus tax on any dividends was less than paying income tax as a sole trader on the national insurance. Previously 30, these days we're looking more like 50. So you've sort of got two aspects to that. A, the point at which I incorporate is higher. And B, you've probably got a lot of businesses out there who are incorporated and maybe will want to think about unincorporating, which is possibly something that people haven't necessarily considered too much before.
Is there anything fundamentally wrong with incorporation from day one? If you're planning to create a sizable business, say at 30, 50, 100 grand of turnover, is it simply a case that you're going to maybe pay a bit more tax in those early days than you would have been as a sole trader?
But you probably won't pay more tax. Bearing in mind corporate rates, corporation tax these days is 19%, going down, planned to 17, although there's a lot of talk that won't happen, but certainly going down to 18. So almost certainly you won't pay more tax. The risk is, like we touched on earlier, with the losses. So a lot of businesses plan to make a profit, and hopefully they do, but I would say probably the majority of them don't. So you're making a loss early. The only thing you can do with your loss in a company is carry it forward. If you never make a profit, those losses are wasted. Whereas at least as a sole trader early days, you can sort of hedge your bets a touch in that you can make a loss, and depending on whether you've got other income personally in the year, you can offset that loss against your other income. Or even if you don't, you can carry it back up to 4 years. So if you went from being an employee earning, 100 grand a year, to giving it a go as your own business and becoming a sole trader, and you make a loss, say, in year one of 40 grand, as a sole trader, you can carry that back. That loss is worth to you 40% of your loss, because you can move it back a year and offset it against that income. In a company, you're just going to lose it.
If we can compare and contrast the different tax treatments, so as a sole trader, you're subject effectively just to income tax.
Yeah, income tax and national insurance. So you're going to pay income tax at the normal rates, 20%, 40% or 45%, and then you're going to pay national insurance at 9% until you get to over sort of 45-ish, and then you're into a 2% margin on everything else unlimited. Once you get to a meaningful profit, i.e. once you're into that 40% bracket, you'd want to start to think about incorporating.
But as a sole trader, you can offset some of your trading expenses, can't you, against that tax bill? You can,
although you can do that in a company also. So essentially the point at which you get to a profit, the accounts treatment is exactly the same. They start with your turnover, everything that you can offset, is the same, whether you're in a company or a sole trader, and you get to a profit figure, and then really it's just a straight choice of, from a tax perspective, obviously there are real life things to take into consideration as well, but from a tax perspective, is it cheaper for me to pay tax as a company or to pay tax as a sole trader? All the time you're in a 20% bracket as a sole trader, you're probably better off there, bearing in mind the treatment with the losses as well, the flexibility with the losses, once you get up to sort of 50 grand-ish. So that would move you into the higher rate bracket as a sole trader with your personal allowance, 11.5 or so, plus a basic rate band of about 34. Once you get up to about 50, you'd want to think about moving into a company. And that's even before you sort of move into the non-tax aspects of life.
So Dean, from a company perspective, from the limited company option, what are the benefits there in terms of the tax savings and things like that over a sole trader?
Well, the real benefit, the big benefit these days in a company, there have been some changes to dividend tax. So it used to be that you could have your profit in a company, you'd pay corporation tax at 19-20%, you'd be left with a net profit, and most of the time, certainly with sort of small family-run companies, you'd see people taking a personal allowance-sized salary, getting that out for no tax, and taking the rest as dividend. All the time you were within your basic rate band, so up to about 50, you could get all of that out with no tax. Changed the rules April 16, which has kind of fundamentally changed how you might think about taxation and dividends in a company, and changed the level at which you'd want to incorporate. So now, those dividends in your basic rate band that were previously tax-free are taxed at 7.5%, and in fact every rate band is increased by 7.5%. So if you're taking all the money from your company every year, the margin between being a sole trader and just paying income tax, or being a company and paying corporation tax plus the income tax, is not very much at all. The real advantage to a company these days is if you don't necessarily need to take all of the money out every year. You can leave the money to accumulate in the company, at some point liquidate and take the money out as a capital gain, hopefully get entrepreneur's relief and pay 10% tax, 20% maximum. Or alternatively, you see people using the company as a way to, say, fund their pension. So you could get 11 grand out as a salary, take as a dividend allowance, you can take £2,000 out as a tax-free dividend, and maybe move the rest into a pension for yourself, for your wife, £40,000 a year into a pension with no tax cost to that. No tax on the pension and a deduction for the company for the payment into the pension.
What about some of the non-tax issues then? So obviously there's the issue of liability. We call them limited liability companies. So if you're setting up a certain type of business where there's a risk, I mean, is being a sole trader a sensible option? Are you really putting your house on the line sometimes?
Potentially. It's an interesting one, the limited liability, because for the vast majority of companies that we look after, obviously you've got big PLCs and limited liability makes perfect sense. I think just thinking about kind of most of our clients, i.e. smaller, family-run, director-shareholder companies, actually I think the limited liability might be a bit over-focused on, in that, say you're running a grocery shop, where is your liability? What are the chances one of your customers has bought a cabbage and is going to come back and sue you? Your liability is with the bank, isn't it? Really? For most businesses, your only real liability is for the bank. Most of the time the bank will have asked you to sign a personal guarantee. So you don't necessarily have a limited liability with the bank. Your house is on the line with them anyway. If you don't pay your borrowings in the company, you've got the personal guarantee. There is no limited liability with the bank. So I think with most sort of family-run companies, actually, is the limited liability aspect really, really something to consider? Obviously, that's dependent on what you're doing. If you're a chartered surveyor and you're involved in multi-million-pound deals with whoever, you might want the limited liability. It might be worth quite a lot, but with a lot of businesses, actually, it might be overrated. It might not be something worth considering at all. And
you can, of course, insure away some of the risks as well.
Absolutely.
Are there any other sort of commercial considerations between the two options? You talked about tax, but when you're dealing with clients and they're trying to weigh it up, what other commercial thoughts are going through their minds?
Yeah, the first thing that obviously springs to mind is you've got fees of running the company, admin fees, associated fees. You're kind of doubling up all of your compliance costs in that you've got to report to HMRC as you would as a sole trader. In addition, you're reporting with Companies House, and they have their own set of things that you need to file with them, confirmation statements, annual returns, accounts and what have you. So you're almost certainly going to incur more accountancy costs.
As a limited company?
As a company.
Right.
And actually that's a consideration. If you're sitting down and you're working out the tax as a company versus the tax as a sole trader, and it turns out that you save £1,000, well, you're probably going to lumber yourself with £2,000-3,000 in fees. So from a real life perspective, you might not want to do it. So you've got that extra time, you've got that extra admin burden, extra admin cost. Aside from that, that's a negative, obviously. Looking the other way, depending on your client base, you've got this image of size that a limited company tends to give. Some customers often will only deal with a limited company. So that might be an aspect to factor in. And then, of course, you've got all the things that you can run through a limited company, like medical cover, phones, which are tax-free now, one per employee, director, cars, if it makes sense, which often it doesn't anymore. But all those things that you could put through a company might be able to get a discount on the premium. And if that discount outweighs the tax that you'll pay, then worth doing.
And then what's involved in the incorporation process? Say somebody started out as a sole trader and they got to the scale where it made sense to incorporate, either from a taxation reason or for other reasons. What are the considerations when you move from sole trader to limited company?
Not too complicated. You're essentially moving an asset into disposing of an asset, your business. So you might have a capital gain there that you're crystallising if you've built the business up to a good size, and you're moving that into you're essentially saying, I'm selling this business to an entity that's not me. Company is connected but a separate entity to yourself. So you've got capital gains tax to bear in mind, and that's the main consideration. There is a sort of deferral relief. So if you're incorporating, you can defer that gain into the company. So if your business was worth nothing at the start and it's now worth £100,000, incorporating, you would have £100,000 capital gain personally, and you can say, I'm going to defer that into the company. So instead of the company having a cost that it starts with of £100,000, it just carries in your cost of nothing, and obviously it will pay the tax eventually. You're just deferring that rather than getting rid of it. So other than that, the process of creating a company is dead simple these days. You can do it in 24 hours with most company formation agents. Most accountants will look after that for you if you want them to. And really, the only other considerations rather than complications are around the shareholdings. Do I want to create two classes of shares? Do I want to have a bit of flexibility on the shares? So instead of creating a company that has 100 A shares, 100 ordinary shares, 50 to the husband, 50 to the wife, you're restricted a touch then on dividends. If you pay one, you pay them all, and so on and so on. You'll see a lot of companies now thinking about setting up 50 A shares, 50 B shares, so you can have flexibility on the dividends and maybe use the personal tax angles of each individual to your advantage as much as you can.
Is it easier getting funding, say, if you're growing your business, if you're a limited company or a sole trader?
I would say probably easier as a limited company.
Okay. Certainly
from a tax angle. There are all sorts of tax incentives to raise money via a limited company. A lot of people will have heard of EIS, the Enterprise Investment Scheme. SEIS, slightly smaller version of that, which incentivise people to put money into your company and take shares and part ownership of your company, and in turn they get tax reliefs.
Right, so you have to be a limited company to qualify for that?
To qualify for those, yeah.
Okay.
Yeah. People can put money into a sole trade, but you're really talking about a loan. And if you can loan money to a sole trade, if you don't get your money back, you've got a capital loss that you can use. But away from that, there's no real incentive to invest in a sole trade, whereas there are all sorts of things in a company.
And what's the role of the accountant in all of this? I mean, what do you do? What do you look at when somebody comes to you and says, I want to go into business? Do I set up as a sole trader? Do I incorporate? Am I a limited company, a limited liability partnership? All these different options. What do you look at?
Well, obviously, the first job is to sort of weigh up the various tax costs against other costs, admin costs, complications, and again, different structures suit different clients. So sometimes you might have a client comes along and is horribly disorganised, and being a company would be a nightmare for them because they have to keep their accounts. As a sole trader, you have to keep accounts, but it's a case of preparing them at the end of the year. Whereas with a company, you need to be slightly more on the ball. You need to have an idea of your cash flow. You're going to be voting dividends possibly quarterly, so you need to know where you stand, how your management accounts are, and so on and so on. So again, there's an element of weighing up what best suits the client just from a life point of view, aside from tax. But then obviously you're considering the tax aspects. And, do we have any employees? Is it worth being a company so we can put some phones through or whatever?
There we go. Okay, that's sole traders versus incorporation. Dean, thank you very much.
Thank you. Okay, and for today's client profile part of the podcast, I've made my way over to Charlotte Street in London, and I'm sitting in the offices of Origin Pictures with a chap who very much makes me look like the amateur in the room when it comes to media content. David Thompson. Hello, David.
Hello.
Thanks for coming on the podcast, and really just 5 or 10 minutes on sort of a bit about you. Give our listeners a feel for what you do here and a bit of your background, if that's all right.
Well, I worked at the BBC for many, many years in the days when people had jobs for life or nearly life. I was felt like life. It was for more than 30 years, and I was originally a documentary maker. Actually, first of all, in educational television, working at Open University Productions.
How did you get into sort of film and TV
I was
before BBC?
Teacher.
Way back when?
Called Bedales, and I taught English and drama and film studies, and really? I saw an ad for a job of a junior producer in Open University Productions, which is a fantastic training ground because I got to go literally all around the world making documentaries on absolute shoestring.
Right.
Like it gave us a small amount. Actually, there was quite a clash in those days because the academics always wanted to do the productions in the studio with them in front of a blackboard. We wanted to take the money, which is about 3,000 quid, and go off and have a nice trip with a documentary camera, which is what we did. And like I went to Thailand and made a film in a Buddhist monastery. Fantastic. Instead of filming a bloke in the studio talking about Buddhism.
I think
it was
I know
a great
which one
training
I'd pick.
ground.
I think I know which one I'd pick.
Yeah, it was a really fantastic training ground, that, because you just were thrown in the deep end and had to rely on your kind of wits. Then I went to a documentary series called Everyman, which is about religion and values, and again we had the opportunity to do incredible stories. I mean, I was in South America and Cuba doing a film about the repression of Christians, a film in the Amazonian jungle about one of the most dangerous Amazonian tribes who had just killed a missionary, speared a missionary, and I went to interview the man who'd done the spearing and found out why he'd done it. Actually done it because he thought the missionaries were cannibals.
Wow.
It was a really kind of rich territory. And then I moved to drama, and the first drama I did was out of religious programs, a drama called Shadowlands, which then became a film and then a play.
Yeah.
Actually, then became a play and then a film. Ours was with Claire Bloom and Joss Ackland.
And when are we talking? Are we talking sort of 70s, 80s?
80s, and then eventually I ended up in the drama department of the BBC and became head of the feature film arm of the BBC, and we did loads of films there, more than 100, including things like Billy Elliot and Education and Education, Notes on a Scandal, lots of films by great directors like Andrew Arnold, Lims Ramsey, and Pavel Papakovsky and Stephen Daldry. It was a great opportunity to work with new talent, people's first films, and as well as more established talent, Stephen Frears, all kinds of wonderful people I had a chance to work with, and great actors, from Leonardo DiCaprio to Kate Winslet to all kinds of Judi Dench, all kinds of amazing people. And so it was a real privilege and excitement, and particular privilege because the commercial imperative wasn't the main one or the only one. Mm-hmm. We had to try and make films that people wanted to go and see, but we were also out there to back new talent. And I had a chance to make the first films of many great directors, including Paul Greengrass and Stephen Daldry and all kinds of amazing people to be involved in their films and backing them. So it was a great opportunity.
You're being very modest here, because this is way back at the beginning of BBC Films, isn't it? I think you were the...
I was the person that really kind of grew it, but it did exist, but it was in a much more modest form, and we kind of really built it and grew it to kind of much more international scope and making far bigger international co-productions, and I suppose grew its ambitions, really. And then I left the BBC in 1997.
So you were there for a good 20 years or so, or longer?
Yeah, 11 years ago. No, so great trepidation. 1988 it was, but great trepidation because I'd been, profoundly institutionalized, having working at the BBC for so long. Yeah. I was very anxious about being out in the outside world, forming my own company. Anxious both, commercially and also just emotionally, I suppose. But we were lucky enough to get some backing from various people, and it's touch wood, it's gone well.
And you obviously enjoy it and passionate about it.
Yeah, and now we make feature films and television films, and recent films included the film about Nelson Mandela, starring Idris Elba, called Mandela. Yeah. a Woman in White, series of Woman in White for the BBC.
That was last year, wasn't it?
And we've got coming up now Catherine the Great, starring Helen Mirren and Jason Clarke for HBO and Sky, which is coming out in October, and which is a really great experience. Catherine the Great in her later life, and focusing on her love affair with a guy called Potemkin, played by Jason Clarke. And it's kind of quite a lavish production, shot in Russia and Lithuania and Latvia, directed by a wonderful director, Philip Martin, who directed The Crown. So that's hopefully something to look forward to.
Yeah, fantastic. I mean, again, you've been quite modest, haven't you? Some of these projects you've worked on have been massive projects, haven't they? I mean, Mandela was a big film.
Yes, it was a big film. It's something I'd always wanted to do. I've been going back and forth to South Africa for years, and I really, making films there, and I really want to tell that story. And Idris was a fantastic Mandela. A good, interesting story. What happened there was we had the world premiere in Leicester Square Odeon in front of William and Kate.
Right,
and
fantastic.
During the film, William and Kate started whispering to each other and looking at their phones. We thought this is really weird, and someone was whispering in William's ear, and it turned out that they'd been told before anybody else that Nelson Mandela himself had just died.
Oh, wow.
And that was literally during the premiere of our film. It was extremely moving and emotional occasion, and we came up on stage afterwards and talked about it. But it was a very strange experience.
Did you get to meet him? Was he involved in the film?
I did meet him, but a long time before that.
Right.
And obviously an extraordinary experience. Another film we've just done is with Annette Bening, Bill Nighy, and the wonderful actor Josh O'Connor, who's playing Prince Charles in The Crown, and the wonderful Annette Bening and Bill Nighy, who are quite extraordinary actors. And it's a story of a breakup of a marriage, which is a sort of quite a common aspect now. People in their later life, these two people, Annette and Bill, the characters they play, break up in their 60s, and the film is about the impact on their son, played by Josh O'Connor. It's a very emotional film, very, I think, powerful, and it's directed and written by the wonderful William Nicholson, who wrote Gladiator and Shadowlands and many other great films, and Les Mis, actually. So it's a kind of mixed bag of things. It's load of opportunities in our world at the moment, business-wise, but also an amazing number of challenges, because there's so many new producers starting up every week. And when we heard that, Netflix have just signed a big deal with the Obamas, we thought, hell, that's it, back up. We can't really compete against them as producers, but everybody's doing it now. And the Obamas were sort of just the kind of last straw.
Well, that was going to be my next question, actually. Obviously, we're at Origin Pictures today, and as you've listed some of the fantastic projects you've been a part of. I mean, and education, I think you're involved with.
Yes.
It was nominated for 3 Oscars.
Yeah.
Some fantastic projects in there. And I was going to sort of move on to, where do you see the industry going moving forward? Do you think things are going to get tougher, or?
Well, I know it's really hard. A lot of people are saying that movies are dead, but there still are opportunities for independent films. And small movies are dead, they're saying. I mean, obviously the tentpole movies, the Marvel kind of films with the huge backing behind from advertising will survive and thrive. It's the smaller films that are suffering because people are staying at home and watching Netflix or whatever.
Yes, yeah.
However, if you hit a bullseye, you can still make a small film work because there is still a hunger for them. But it's a very kind of narrow target you've got to hit.
Yeah.
It's got to really work in every way, creatively, and it's got to just hit the right button. My own feeling is that long form television with endless series of multi-parts, people may want something a bit shorter form as an antidote to this. And actually, Catherine the Great's only 4 hours because the commitment is so huge. There may be a swing back to slightly shorter form drama.
Yeah.
Even to the point where, people are, I think it's Jeffrey Katzenberg set up this thing called Quibi, which is like $1 billion operation to make 10-minute pieces
Right.
on the internet. So, I don't know whether that's going to work. Who knows? But it's like a gold rush at the moment. Everybody's scurrying around, digging in the ground, trying to find out what's going to work. Yeah. And there is amazing, amazing, amazing work out there. Anybody who watches Netflix and Amazon sees, and all the BBC, you can see incredible work out there, groundbreaking work, which actually also makes it difficult for producers in a way, because when I started out, it was easier to be groundbreaking. I mean, I worked with wonderful directors like Alan Clark, who made films like Made in Britain, and I did The Firm with him about football hooliganism, which really were groundbreaking in those days. But now it's like almost everything's been done, so it's kind of harder to be really different and stand out.
Harder to shock people, I suppose.
Yes,
Yeah.
or not shock, just even kind of be amazing and just be because, Killing Eve was, surprised people. Recently, I think it was very surprising to people. And
fantastic.
And I suppose, just a small show, but a very powerful one, like Phoebe Waller-Bridge's show. Fleabag can equally be, quite simple, but very striking and incredibly popular. So you don't have to spend a load of money, to make big budget, glossy production necessarily. Often the smaller, intimate things can also really work.
Absolutely. Fantastic. And what about outside of work? You enjoy working in London, living in London?
I do. London has got, in many ways, better all the time and more exciting. I live just on the North London, near Parliament Hill, really near the Heath, and I think it's a great and very vibrant city to work in. It's sort of unrecognisable from even sort of 10 years ago.
Yeah, absolutely.
Especially around Charlotte Street and all that. So I think, though, an interesting fact is that I go to work in the West End in Charlotte Street, and I do come across as very ancient, because you don't see very many people out at work in their over 60. It's interesting. It's like I don't know where they've all gone or they're all hiding, but it's if you look around the West End of London, you hardly anybody see heading off to work who's even older than 50, actually, curious enough. It's just an observation, which your listeners may disagree with, but it's my observation.
One of a kind.
Yeah.
And what's the plan is to keep going for a bit longer yet?
Yeah, well, I'm really enjoying it. It's stressful, but when it goes well, it's really good fun. And it's it's great. And we have got to put a plug in here, though, but we have had... running a small business, it is. I may just haven't been asked to say this, but I will say it. It's quite challenging, and we have had fantastic support from Shipleys from the very, very outset. Because particularly nerve-wracking for me, coming from an institution like the BBC, where you're very supported and backed up. But from the very beginning, Shipleys were our kind of not just our accountants, but also our kind of counsel and advisors about how to do things and navigate in a very complex world. And that's been a great help, actually, both on the personal finance side and also on the corporate finance side. Good.
Thank you. Very, very kind. Perfect. I think we'll wrap it up there. Appreciate your thoughts. And you've led a far more interesting life than I ever will.
I think that's nonsense.
Thanks, David.
Now, everyone is terrified of the taxman. What are the things that are likely to spark an HMRC investigation?
Well, probably worth starting with what types of HMRC investigation can they open, because you tend to find either you're looking at a aspect inquiry into one aspect of your income, which maybe isn't quite so intrusive, or worst case scenario, a full inquiry into everything, where you're going to be asked to provide all your bank statements and all of everything, which can be a bit of a nightmare and can drag on actually for a hell of a long time. I've got one inquiry going on for a client at the minute that's been in place for at least 3 years. And so far, HMRC have managed £1,200 in tax. So these things can drag on, even when you think maybe they won't. So there's two different types of inquiry, one worse than the other, really. In the old days, you'd probably be thinking about, what might spark an inquiry if I put a massive piece of expenditure that hasn't appeared before in, if my number of employees stays the same but my staff expenses triple, those sort of things. You'd be thinking about tip-offs from the guy around the corner. You go down the pub, you tell your mates, I've earned 50 grand this week and I've only paid tax on 20 of it. Those sort of things. I think these days HMRC are probably moving further away from those types of things, and they've got fairly powerful software these days called Connect, I think, where they are mirroring up all the information they have from all government departments. So they're bringing in land registry, DVLA, electoral roll, and all sorts of stuff. And it is possible for them to sit there and say, you've got a Rolls Royce, you're living in Fulham, you're a member of the golf club and what have you, and you're declaring £12,000 worth of income. So you're seeing a lot more of those kind of how you're affording to live inquiries coming out, and obviously that's the way they're going with the technology. Okay, and for today's Shipleys staff profile, I've got with me none other than my manager, esteemed head of tax here at Shipleys, Mike Luckett.
Hi Dean, how are you?
Well, thanks, Mike. Right, how long have you been at the firm now? 50, 60 years?
No, not quite. I worked originally with HM Revenue and Customs, as a number of the people who work in our tax function did, or ex-customs, or Inland Revenue as it affectionately used to be known. I left them in 1979 and joined an accountancy practice, which in turn merged with what was then Shipley Blackburn in 1992, and I've been here ever since.
Up in London the whole time?
No, partly in Godalming, where we have an office, a fully functional office there, and partly in London, and you go where the clients require you to be.
Yeah, and you've always been in tax, obviously coming out of HMRC.
Always been in tax, yeah.
Any particular bits of interest or bits that you don't particularly like? Or
I think tax, and it's very sad to say, I find it fascinating. It never stays the same. It's constantly changing. No one can ever claim to be an expert in every single tax. There's just too much to be an expert in. Yeah. And because of that, no one day is ever the same.
No. And what does apart from making sure I'm not telling people that they're rubbish, what does a normal day at Shipleys involve?
Well, apart from trying to find out when you put in your diary that you're on a course, needless to say that involves clubs and balls. Generally, apart from making sure the tax practice runs like a well-oiled machine, and sometimes it does and occasionally it doesn't, it's also dealing with whatever comes up on that day. And you can one day be dealing with an inquiry for a client, the next day you could be assisting them on the planning, on their probate work. All sorts of things come in, say, each and every day. Yeah,
perfect. And what about outside of work, outside of Shipleys?
My hobby is skiing.
Yep.
My other hobby is skiing, and then I think the last hobby I've got is skiing.
Fantastic.
So as you may have gathered, I ski.
And what's the plan of retirement?
Ski. Yeah. Yes. I'd like, because we had at one of our famous breakfast clubs that is held by Godalming that you help to compare occasionally. We had a question there once which sort of said, if you didn't do this, what would you do? And I put a ski instructor and everyone guessed it was me.
Fantastic. I think we'll leave it there. Thanks very much.
Thanks, team. Take care.
Okay, so that concludes episode 1, the very first episode ever of the Shipleys FM podcast, Sole Trader or Limited Company. I really hope you enjoyed that. Really appreciate you listening. Thank you for inviting us into your offices, your homes, wherever you've listened to us. And I really appreciate that. Please feel free to share this with associates, colleagues, clients, friends. If you've liked it, like it. Any comments would be great. You can find where to make a comment. Any feedback would be wonderful at shipleys.com/listen. Give us a review on wherever you get your podcasts from. Again, at shipleys.com/listen, you'll find ways to suggest any future content, any questions you'd like to add. Go to the website and you'll find ways to do that. My immense thanks to David Thompson, who was wonderfully interesting, and thanks for being a part of the podcast. And we'll look forward to hearing from you soon. Look out for the next podcast in a fortnight's time.
Thank you for listening to Shipleys FM. Visit shipleys.com/listen to find out more and to subscribe to the show in your favourite podcast player. Tune in next time to hear more accounting and tax-saving insights from Shipleys LLP and our guests, all designed to improve your business and personal finances.